Hello, everyone. So today I want to talk to you guys about what's happening in the market. Where do I see things are heading from here? I also want to talk about some of the companies that people have discussed in our WhatsApp group. Some of those questions pop up as I was doing my events. So as you guys know, I do a lot of live events as well. In matter of fact, I think on next Saturday I will be in Fremont, California. So anyone of you guys want to come see me in person, you're welcome to do so. So I'll be there, and we also have a Wealth Summit coming up on November 16th. So please register for that in advance. So people ask me questions about different companies, and oftentimes I don't have time right there, right then to share my thoughts. So I compile those questions and try to address them in this video format, so that way everybody can benefit from that. So we're going to talk about a lot of great companies: Netflix, Costco, Gartner, and I think there was questions about T-Mobile and some of the other companies. So I'm going to try to cover them as much as possible. So you're going to find a lot of values if you are invested in these companies, or if you're thinking about investing in these companies. As a reminder, I'm not an investment advisor. I don't tell you what to buy, what to sell. So please certainly don't rely on anything I say. Use this information as a starting point for your own research. My goal is to help you think a little bit better about your finances, help you think a little bit more broadly as to happens in our economy and how they impact our bottom line. I share all of these details in a little bit more, I think, it's easy to understand manner in our coaching program. So, if you want to learn practical aspects to improve your financial education, then I would advise you to join that coaching program. I think you're going to walk out with a lot of great information. A lot of time, like you read these books and you join some of these other training programs, they're more theoretical, and it takes long time for you to really get out of them. Um, and I've been victim of that as well. I mean, I have a lot of books. I read a lot of books in my life, and they all sound great. They're all convincing, but to apply them in a practical life was extremely difficult. I think you learn this practical knowledge as you are on the street, as you're playing, and that's where you get that. And that's my goal, that in this coaching program, teach you those practical aspects of finance. So if you're interested in that, join that program, and you're going to find a lot of value. But for today, we're going to talk about what's happening in the market. So let's start with the basics. Market been super hot since April. Uh, in matter of fact, it's been hot the entire year. Volatile, scary roller coaster ride, but hot, right? We are up almost close to 10% year to date. That's pretty good in such an environment. Now, going into September, October, we were hoping we are going to get a catalyst from the Feds because of interest rates. Trump can still come and give us a new Fed chair announcement. So that could be another catalyst. But at this point, I think most people are saying, because we got the jobs report, people were not happy. But President Trump, immediately announced that, hey, don't rely on this data. And we're gonna find somebody else who can give us a little bit better data. So people kind of brushed it off. Then we got a little bit of hot inflation report, and people said, okay, we can handle it. It's not that bad. And then last week we got the wholesale inflation report, and it was way higher than what people have expected. And that's what got people panic, and people start selling. So at this point, the way I look at the market, I said, there's just not enough positive news to take this market to new heights in the next couple of months. So we might see a little bit of a turbulent ride going forward. Or the way I call it is opportunistic time to take advantage of some of the dips. So I don't expect market to crash. Unless we got a black swan event like inflation just comes out to be really hard, or unemployment report comes out to be really really crazy. If something like that happens, yeah, market can certainly crash. But I'm more of a positive person. I always assume things going to work out. So I kind of look at it and I'm like, okay, so it looks like there's not much of a positive news in the market right now. So market is going to be sideways. And once we come into the fourth quarter, things going to start to get really hot again. So that's what I'm thinking about the market. And let's talk about some of the companies that you guys have mentioned lately. I think, for example, let's start with the health sector. I saw it in our WhatsApp group. There's a lot of talk about UnitedHealth. There's talk about Nova Nordisk. So let's start with that. So a lot of people get excited about the health sector because Warren Buffett is back into the health sector. And matter of fact, I think we were doing our discussion call in a coaching program about maybe 6 weeks ago or something. And I said, if there's one company Warren Buffett would want to buy right now, that would be United Health. It makes perfect sense. It's in his criteria. Whenever Warren Buffett buys a company, he takes a look at overall company, the entire business, and he take a look at the cash it can produce, what kind of cash it's producing right now, and what kind of cash it can potentially produce in future. And you add those two numbers, it makes perfect sense that Warren Buffett would want to buy it. Warren Buffett average price on United Health was a little over $300, and the United Health dropped what I think to down to 234 or something like that. Um, so it's kind of interesting. Now I want to remind you guys, a lot of people are super excited about the company because Warren Buffett invested in it. But I want you to think about the risk reward ratio. Okay, so we all take risks, right? You probably have some speculative bets in your portfolio. What do you think a speculative bet looks like? Speculative bet might look like maybe 5% for some of you guys, maybe 3% of your overall portfolio, maybe 2%. Some of you guys might say 1%. So my advice to you would be is go take a look what percentage of Warren Buffett portfolio is in United Health. And if I'm correct, it's not even 0.5%. So for him, this is a pure speculative bet. He's not in it big time. So I know a lot of people are getting super excited about it, but I think people are ignoring that point. So that's number one. Number two, there's so many companies Warren Buffett, he invested in Paramount, he invested in Occidental. I invested in Occidental back in the days as well, but made some good money and then got out. And then many other. And not every single thing that he invested in works out. His horizon is a lot longer than many of us. Like he can hold on to investments for a lot longer. So my main point is, I'm not going to get into a company just because Warren Buffett invested in it. We still know that regulatory risks are there. We still know United States Health is still getting investigated. We also know that their guidance for now is just on hold. They're not expecting to make money for any time soon. So we don't know when that's going to change. So nothing fundamentally has changed with the company. So I don't want to take that risk at this point. There are better sectors where I don't have to take a risk. So some of you guys who love a thrill ride, you're welcome to jump on it. But that's my take on it. That's why I'm not super excited about United Health. Now, I was in United Health until the company announced that they are no longer thinking about making money or fixing the problems anytime soon. So I'm not going to take that risk. I'm out for time being, and I'll come back to it when the fundamentals improve. Let's see. I made a list of some other companies. Let me bring that out. Okay, here's a good one. What's the relationship between Circle and Coinbase? Yeah, so this a lot of time people get confused. Sometimes I'll see people they say, "Oh, we are bullish on Circle and we are bearish on Coinbase," uh, and which is kind of weird because they obviously don't understand the relationship between these two companies. So I'm glad that somebody paid attention to it. So let's talk about it. So back in 2018, Circle and Coinbase they got together and they made something called Center Consortium. And the idea was to launch, a stable coin. These days we call it USDC. And basically, the idea is that the stable coin going to be pegged against the US dollar. So, a lot of people can use it. So, for example, let's say a lot of you guys are from Asia, right? So maybe from India, Pakistan, Sri Lanka, or maybe you have a friends and family members and maybe they have a hard time being able to directly invest in US dollar. Well, now they can own USDC just like they own any other equity out there. And if they own USDC, it's pegged against a dollar, so they're essentially holding a dollar without actually holding a dollar. So the idea with that was that a lot of countries out there, and we see inflation. Like go take a look at Turkey or Argentina. I mean, inflation is crazy. Asia is still not bad, but you take a look at, I mean, even in Asia, take a look at inflation in Sri Lanka or Pakistan or Bangladesh. You know, um, in all of these places, USDC makes perfect sense, right? So they said, you know what, let's do that. So back in those days, Circle decided that they were going to handle the issuance, compliance, and the reserve for USDC. and Coinbase provided the access, the customers. So they say, look, we have this the entire exchange. We can give you access to retail investor, institutional investors. So we basically give you this distribution layer where you can go out there and sell this product. So this made Coinbase the most critical driver of USDC's network. Without it, I don't think USDC would get as much adoption as it has been. And it's huge. So people might not realize it, but people are loving this. And that's why Trump administration loved it too. I think it's a great way to drive the demand for the US dollar. Now, the obviously you guys know Circle is an independent company at this point, but they Circle and Coinbase actually had a revenue sharing agreement between the companies. So when you hold USDC, Circle keeps the cash and short-term US treasuries in reserve. Now these reserves earn interest, and right now those interest rates are roughly around 5%. So that's awesome. Now, Coinbase, hear me out. This is what you're going to love this. Coinbase gets at least 50% of that interest income from reserves for USDC held off the Coinbase platform. Now, if, for example, if USDC reserves earn $1 billion in interest income, $500 million flows directly to Coinbase, even though Coinbase only owns 3.5% of Circle, might be even less. I'm just making a rough guess here. So you can see Coinbase actually gets a lot of benefit out of it because they are the one who have the customers. Now, Coinbase user base, those of you guys who don't know, is well over 100 million accounts. Think about that for a second. And they have a lot of institutional clients, unlike Robinhood, for example. So they can distribute this USDC all over the place. Coinbase handles the onboarding, they handles the liquidity, they handles the trading. So all of those aspects are actually handled by the Coinbase. Again, that makes the circulation of USDC more easier. Now, when interest rates were near zero, the split didn't really matter at that time, right, between Circle and Coinbase. But now that rates are really high, reserves have come exploding, right? So Coinbase is making tons of money. Doesn't mean they're always going to make money. When the interest rates go down, this venture would not look as lucrative to Coinbase. But that's what it is, right now. Let's take a look at 2024, for example. Circle earned $1.7 billion in revenue. Coinbase share was $908 million, right? 53% of that. In Q2 alone, $625 million in reserve interest income, and Coinbase got $332 million. So Coinbase is actually earning more from USD interest than from some of its other core trading operation. So kind of scary how this stuff is working out, but that's how it is. Now, this arrangement right now looks like Coinbase in a key USD stakeholder without major ownership. Circle gets distribution power. Coinbase gets a massive, relatively passive revenue stream. It's a good partnership. Like I said, if the rate drops, then the windfall is going to shrink. But as long as USDC circulation is there and rates stay high, I think Coinbase is going to continue to make tons of money out of this. Okay, so another question is about Cisco. Hey, Cisco is doing very well. What do you think? Can it be, next AMD or Nvidia? Yeah, Cisco is interesting. Yeah, I agree. They had a decent quarter, and I have a lot of friends who work for Cisco, and they love the company and all that stuff. But I think as of right now, Cisco is still a little bit behind. So Cisco is certainly trying to gain grounds. They lost a lot of business to Arista Networks. So if you're thinking about Cisco, you probably want to take a look at that company as well. And a lot of pretty much all of this technology is moving in the direction of AI. So Cisco has to do a lot of catch up. And one of the problem is Cisco has a workforce that's been with them for a long time. So unless they can get some new players in the mix who can really quickly turn the company around, I think they're gonna they're gonna be a little bit behind. You know, Now the CEO of Cisco himself has acknowledged that they are currently playing a catch up in the new AI driven networking business. So will they be able to catch up? I don't know. I mean, these things move so fast. So if you don't already have a human power to deal with these things, that could be a little bit of a problem. So I'm not super excited about Cisco right now. I'm gonna wait and watch, see what happens, and then we'll go from there. All right, Deepak ji, what do you think about some of these companies that are providing informational services because they used to be very profitable because easy money? What's going to happen? Yeah, so AI is certainly going to impact all of those companies, right? Because getting access to data is going to become a lot more easier. In matter of fact, I was watching an interview of Twitter's not current CEO of Twitter, but the original CEO of the Twitter, and he has started his own company, and he was saying that the new user for internet is going to be the bots. The internet was designed to be used by humans, but we have changed that. Now internet is being used more by this artificial intelligence and bots. So he's working on a project in that arena, and certainly agree with that vision that a lot of these bots are going to do those kind of jobs. For example, if you take a look at Gartner, right, their guidance came out lower. Like for 2025, EPS is lower than 2024. Now some of it is political because Trump administration is obviously not paying for these kind of services. But the truth is, AI is certainly impacting people who are in consulting and advisory business, because you can easily get a lot of information, even in finance, by the way. You can ask ChatGPT or anything like that, and it will give you the answer. The good thing about finance is that information changes so fast, and it requires a little bit, not a little bit, a whole lot of critical thinking. Charlie Munger used to say, and even Warren Buffett, I think I heard him say a few times, that investing is not supposed to be easy. If it was easy, anybody can make it. It's supposed to be hard. It's not that easy. Otherwise, all these robo apps and stuff like that would make a lot of money. So, anyhow, to answer your question, I do agree that these informational businesses are going to struggle. I know a lot of people sold newsletters to clients. A lot of people sold, all kind of information back in the days, but it's just not relevant. Those companies are going to have really hard time. Okay, next question is about Tesla. Tesla. So Tesla is an interesting one, right? We already know they have been losing in market for a while now, in China specifically, and even in Europe and in Asia, they're having a not as good of a time. And especially now that we have this interesting relationship around the world, Tesla being a U.S. company is not being loved either. And then on top of that, we have federal tax credits that are going to expire pretty soon. So that's going to remove any kind of tailwind they're probably getting from them. However, in spite of all that, Tesla stock is what, still over $300, right? Like people are just completely ignoring it. They're not really looking at the fundamentals, anything at all. So I think people are expecting that Elon Musk can manage all these challenges and come up with a product that is going to be revolutionary, and they can certainly increase their earning per share. Now, Elon Musk been selling stories for a long time now. People love their product. People love his presentations. People love his vision. So people, I call Tesla a cult stock, and cult stocks are weird because you know. People just don't want to let go of that stock regardless of how it does. So that's one of the lessons, by the way, I learned in the last couple of years, that you don't want to mess around with cults. They're way too strong. So I tend to stay away from it, because that ride can be very interesting, because it's a ride without having any kind of base. So I can it can drop 20,000 in matter of seconds. So kind of a little bit of scary. But Tesla, for time being, obviously, because the federal tax credits are expiring, they're going to get a lot of sales. So next quarter, maybe the numbers look really nice. I've been seeing a lot of institutions being buying into Tesla. So if you believe in the story, if you believe in Elon Musk, not a bad thing to hold on to it. Personally speaking, I see a lot of opportunities in other places. I don't want to be on that kind of ride that can be this rocky, and especially when I don't feel comfortable with valuation. Okay, what do I think about wireless companies? Yeah, wireless companies are interesting right now because you take a look at Verizon, you take a look at AT&T, T-Mobile. Um, I don't know, their Metro, which is now owned by T-Mobile, and so forth. So wireless companies, I think the biggest risk is from SpaceX. They are Elon Musk had these satellites that are starting to provide internet. No matter where you are, can you imagine being able to get a high speed internet while you're flying, or while you're on a cruise, or while you're taking a trip somewhere in the mountains? Same kind of quality internet. So I think SpaceX is going to revolutionize that space as well. So I'm not once again, I'm not that excited about that space anymore. But if we ignore the future and we just kind of focus on what's happening right now, one thing is clear, that T-Mobile is kicking everybody's you know what, right? So T-Mobile is. And you can, by the way, tell a lot of these things by just looking at the PE. If you take a look at AT&T PE, right now it's what, 13 and a half. Verizon PE is somewhere around 9, and T-Mobile PE is roughly around 24, 23, somewhere around that. So I mean, that's a high PE. Why? Because investors thinks that PE is a high growth stock, in an industry that might not survive for that long. So it's a risky one. You never know when that revolution happened. But out of all of those, T-Mobile is the one that is providing a big growth. All the other companies are struggling, or at least losing customers to T-Mobile. But T-Mobile itself is not immune. If I'm not wrong, Warren Buffett actually sold out of T-Mobile. So keep an eye out on that as well. So I don't know. Once again, me personally, I'm gonna avoid that sector altogether just because it doesn't make sense. Okay, next question, Deepak. You've been posting a lot of things about M&A. What are you thinking? Well, very simple. So interest rates are going to come down at some point. Whether that happens in September, I don't know. Maybe it happens, end of the year or next year, or whatever. I mean, Feds can always call an emergency meeting if we start to see unemployment numbers start to rise critically, and issue a rate cut. So anything is possible, or Trump can come back and say something that can drive the market. But the truth is, investors are comfortable with Trump administration. They think he's very business friendly, and they are on the run to acquire good companies. In matter of fact, some of my best clients grow because they buy other successful business. It's just so much easier to buy another successful business than starting one from scratch and spending all the time. I mean, I give you my own example. My coaching program. I mean, I have to do a lot of work, right? I have to do a lot of events. I have to make a lot of these videos. I have to share a lot of quality information. It takes a lot of effort. Trust me. If anybody else wants to do it just the way I'm doing it, without like, I think it's easy to sell the program if I display how much money I have made year to date. The problem is when you do that, you get all kind of people who are just really greedy, and they want to join in the program because they want to copy the returns. They don't pay attention to the education part of it, right? So that is an easy one, right? But if you want to do it authentically, that means you have to do a lot of research, you have to do a lot of thinking, you have to present a lot of content, you have to give a lot of value. If somebody gives you $1, you need to give them $100 worth of value. That's when people get it. It's so hard to do that, right? But if you acquire like, I can go buy a company that already had a good coaching program, they already have thousands of customers, and I can just sell it as an add-on. That is just so much easier. And that's what I'm thinking. In the next 3 4 years, we're going to see a lot of companies buying a lot of small businesses, or perhaps even bigger businesses. I think for companies like Meta and Google, it's a little bit more difficult. But small and medium-sized companies, they can always acquire other companies and grow. So that's why I'm really, really excited about M&A. So anybody who's involved in M&A, big banks like Morgan Stanley or Goldman Sachs, I think they're going to see a lot of benefit out of that. So that's what my thought process on that is. But even as a small business owner, if you can find a good business that is producing good cash flow, and you think that's going to make money, take a look, see if you can negotiate a deal, because not everybody wants to run a business. So if you're able to get into it, that could be really, really good. All right. How about Meg 7? What do you think about Meg 7? I mean, Meg 7, I maybe you got to look at the individual company. So for example, I've been hearing a lot of thoughts about Google, right? Oh, Google is losing market share, AI going to come after their search business and all that stuff. But then I look at YouTube, for example. I mean, do you see any alternative to YouTube? It's such a huge business. A lot of people search on YouTube these days. I don't think. I mean, I don't know if if there is one. Let me know. I don't see there's a challenger anywhere close to YouTube. Such a strong business. Meta, they're like a cash printing machine. Nvidia, or Apple. I mean, these are some great businesses. Microsoft. I mean, I would. I love all of them. I just don't like investing in them because everybody's involved, right? I want to find opportunities where I can still get things a little bit cheaper. The problem is when I buy stuff that is highly priced, but it had a high growth potential, is that it also carries a lot of risk. So I want to kind of manage my risk. That's the only reason I don't do it. But I love the big tech. I mean, it's one, and it's been a great story for many, many years now. Okay. Let's see. Next question is Deepak, you've been talking about manufacturing for last few days. What are your thoughts there? Which company will benefit from manufacturing? Yeah, manufacturing. So I was listening to an interview the other day. I don't happen to remember the name of the company, but they were talking about that they are now involved in building factories in the United States, and they're able to build and deliver a factory in less than 6 months, and that's like complete with automation, robotics, training of the employees, and all that kind of good stuff. So, and they have a lot of back orders like from different clients. So manufacturing is certainly coming back to the United States. At least it looks like. I mean, but at what scale and how much meaningful impact it's going to have is unknown. So I don't know, how successful it will be. It's like it's still too early to tell. So I would probably wait. As an investor, I will certainly wait. I'm going to keep an eye out on it, but I'm going to certainly wait. Like, for example, AI story, Nvidia story, Broadcom story, AMD story. I think these ones you understand, or Microsoft story. These are obvious, right? But manufacturing still a little bit too early. We don't know how things go. I'll give you a couple of things. I'll say, look, the story drives the valuation for any company. Every stock needs a good story. So very simple. Take a look at your companies. Like, say if you own Verizon, or you own Dell, or you own Cisco. Okay, take a look. What kind of story do they have? Versus if you own Nvidia or AMD or Broadcom, then what kind of story they have? I think you will start to see things become a little bit more clear. Take a look at stocks in your portfolio. They are probably very reasonably priced, but they're not growing. Why? Because they're boring. Nobody wants to own them. They don't expect them to deliver exceptional results. Now, on the other hand, it's a very good balance you have to play, because sometimes stories can be disruptive, right? For example, with Nvidia, we saw last year when DeepSeek came out, and immediately this stock dropped. Like, oh, do people even really need Nvidia anymore? So that's the problem with stories, that they can change in a heartbeat. So be very, very careful. One of the mistakes I remember for this year is and it's not, it's like over the years, you kind of have built your own rules. So my rule is to ignore political stories. I try to kind of tune them out. But this year we saw what happened with MP Materials. We saw what's happening right now with Intel, uh, and many other companies. Like, for example, we saw what's happening with the Nvidia and AMD. All of a sudden, United States is getting involved in businesses, right? That was not the case for many, many years. In matter of fact, the whole idea was the United States is going to, that the government is going to stay out of that stuff. But now the government is getting more engaged in that stuff. So whenever that happens, you have to reevaluate things and kind of look at things from a little bit of a different direction. But anyhow, for the time being, my take is, overall, I think market is still looks pretty stable. So I'm still bullish on the market at this point. At the same time, I'm very cautious. In the short run, I think we don't really have a major catalyst right now to drive the market any higher. So we just got to be more cautious. I would not want to be complacent in the market. I don't want to do crazy things, crazy risky things that can come back and haunt me. I want to have a little bit of cash aside so I can buy the dips, and that's about it. That's what I'm doing. We talk about these things in great details, in specifics in the coaching program, so that way people have a little bit more clarity. But I think I have been more than fair with everyone and shared my honest thoughts about many companies out there, and I plan on doing this on a regular basis now, because you know. It's helpful when we are able to share that knowledge with the rest of the world. It brings a lot of good luck back to us. So that's the thought process behind that. So expect much more many more videos coming out from me to talk about some of these specific out in the industry. I hope you enjoyed it. And if you want to learn more about the coaching program, or you want to learn about the Wealth Summit, or you want to learn about some of my other events that are coming up, then I encourage you to join the WhatsApp group. And in WhatsApp group, by the way, we have super smart people. They're not my employees. They are not my. They don't get paid from me. They're independent people. Just like you and me. They're going on about their job, but these people talk about their point of views. And when we hear multiple smart people talk about their point of views, we're able to make a little bit of better decisions. So I encourage you to join and engage yourself in that conversation to improve your thought process. As always, don't rely on anything I just said. I'm just some guy. If you're looking for some super smart expert people, go listen to people who have PhDs in finance, and they can teach you how to do it in much more a better detailed manner. I talk about things from a very simple perspective because that's what I understand, and that's what works for me. So if I can be of any help to you, please reach out to me. Just go to taxcodeadvisors.com and you can find my contact information from there, and send me a WhatsApp message. That's the way I like to communicate, because I get too many messages. That you can see, even for this video, I got so many of them. And going forward, yeah, if you have a question about a company or something like that, just send me a WhatsApp message, and I'll try to cover them in the next video to bring a little bit more clarity for you guys. All right, guys, thank you so much for spending your last 20-30 minutes with me, and I will see you next time.